Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, we are going to discuss a very important notification of the Reserve Bank of India that is regarding the STRIPS. Okay, so we will understand that what is the STRIPS in the state government securities, what is the meaning of the stripping and the reconstitution. And this is a very important news article. This is a very important notification of the Reserve Bank of India that we are going to discuss in today's session. And from this topic, you can expect the objective questions in the examination. Okay, and let me tell you that this has been under the radar of the Reserve Bank of India since 2019, and at last in 2025 the decision has been taken to allow the STRIPS in the state government security. So you can understand that this is a very big step that the RBI has taken. So which state government securities are we talking about, and all the eligibility criteria and such we are going to discuss in today's session. And this news article is very important from the examination point of view. So let's get started. Give me a thumbs up if I am clearly audible and clearly visible, and let's get started. But before that, to subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So if you want to get the PDF, just join the Telegram channel and you will be able to get the PDF of the sessions. Okay, now starting with the stripping or reconstitution in the state government securities. So the state developmental or state development loans are also known as the state government securities. Okay, so sometimes we will be calling it as state development loans or the state government securities. Okay, so this is the idea. So see, as the central government releases the government security, so through this the government raises the funds. So government security, this is a financial instrument. This is a financial instrument through which the central government asks for the money, or through which the central government is taking the money. Let's say central government has taken 1,000 crore rupees through this financial instrument, through this government security for a period of 14 years, and the interest rate is promised 8% on the half yearly basis, on like 8% on yearly basis, and half yearly payments will be made. That means 4% will be paid on the half yearly basis. Okay, so this is the idea. Similarly, we have the state government securities. So the Reserve Bank of India is the one that issues the securities on the behalf of the government. Okay, so it is the Reserve Bank of India that handles the issuance of the securities on behalf of the government, and the Reserve Bank of India collects the money to give to the central government or to give to the state government. Okay, so through the state government securities, the RBI issues these securities to raise the money for the state government, the money that is required by the state government. Okay, so this is the basic idea. I hope this is clear that the government securities are the securities, they are the financial instrument through which the government raises the money. Here we are talking about the state government securities through which the state government raises the money, and the RBI is the one that issues the state government securities on behalf of the state governments. Okay, so this is the idea. So based on consultation with the individual state governments or union territories and the feedback that has been received from the market participants, it has been decided by the Reserve Bank of India to introduce separate trading of registered interest and principal of securities in the state government securities. So basically the STRIPS has been introduced in the state government securities or the state development loans, we can say. Okay, now what is this STRIPS? To understand the STRIPS, we first have to understand the stripping and the reconstitution. Okay, so now here, as I've told you, that this concept of stripping, this was it was announced by the Reserve Bank of India that we are looking into this for the state government securities. Okay, so as a debt manager to the states, so RBI is the debt manager of the states, and RBI issues the state government securities on behalf of the states. Okay, so RBI is the debt manager to the states, and the RBI has been making efforts to develop the state development loan market in both the primary and secondary segments. So to increase the liquidity in the market and to increase the demand of the state development loans or the state government securities, the RBI has been working continuously. Okay, and RBI is the debt manager to the states also, as the RBI is the debt manager to the central government. Okay, so the RBI has been again and again trying to boost the liquidity in the state development loans, to boost the demand in the state development loans, and to boost the and to develop the primary and secondary market in the state development loans. Okay, so RBI has been taking efforts, and in continuation of these efforts, RBI decided to introduce the stripping or reconstitution facility for the state development loans. So the RBI has decided it in 2019, and RBI after that came into the consultation with the individual state governments or union governments, and the RBI also took the feedback from the market participants, and now in June 2025 the RBI has decided to at last release this stripping or reconstitution guidelines for the state government securities. At last the RBI has brought the STRIPS. So you can understand that this concept or this idea was present in 2019, and it was announced in 2019. After that the RBI consulted with the respective state governments, and it took some years, but now at last the RBI has brought the STRIPS in the state government securities. And let me tell you that it's not like that for central government securities it is not available. For the central government securities, this kind of stripping or the reconstitution, this concept is available since 2010. So here you can see that this is an addition. Now the stripping or reconstitution that is brought in state government securities, this is in addition to the stripping or reconstitution that is already permitted since April 2010 in eligible central government dated securities. Dated securities means that are for a longer period of time. Okay, so here you can understand that stripping and reconstitution was available for the central government securities since 2010, and now it has been brought for the state government securities also. But what is stripping or what is reconstitution, that we have to understand now. Till now, any confusion anyone has? Any confusion anyone till now? So basically RBI since 2019 wanted to bring the STRIPS or the stripping or reconstitution for the state government securities. Now after consultation the RBI has at last brought it. Okay, at last announced it. So stripping, so the process of stripping and reconstitution. So basically stripping means the process of separating the cash flows associated with the regular government security. So what happens under the stripping? Let's take an example to understand it clearly. Let's say that you have a 5-year state development loan or the state government security. Okay, so you have a 5-year state development loan. Now the face value of this state development loan or the security that you have, so for the state government security that you have, the face value is 1,000 rupees. Okay, that means you have given 1,000 rupees, and on maturity after 5 years you will get 1,000 rupees. The coupon is 7% annual. So the coupon or the interest rate that you are getting is 7% annual. That means for the 5 years you will be getting 70 rupees every year. Okay, so the face value, the value of the coupon is 1,000 rupees. This is the face value. That means this is the money that you have given, and you will receive on maturity this 1,000 rupees. Okay, now the interest rate is 7% on the annual basis for 5 years. The security is for 5 years. So for 5 years you will be getting 7%. That means 70 rupees each year you will get. Okay, so 70 rupees each year you will get. Now the maturity value will be 1,000 rupees because this is the face value. So this is the maturity value that will be returned in 5 years. Now under stripping, what happens that we are separating the cash flows. That means the face value, that is 1,000 rupees. Let's say you have paid 1,000 rupees. Okay, now this is becoming a separate security, and this, the interest in the first year, the interest in the second year, the interest in the third year, the interest in the fourth year, and the interest in the fifth year, this is becoming separate units, and you are selling each of the unit. Let's say Kritika, that is me, has bought this state government security, and now I am doing the stripping. That means I am dividing these cash flows, or I am separating these cash flows, and I am selling this security. Now let's say 1 year has passed. Now I am selling this security, let's say for rupees 900 in the market, right? I am selling this for 900 in the market. Now would you want to purchase this? Yes, let's say you will want to purchase this because I am selling the security for 900, and you know that after maturity, like after 4 years, you will be getting 1,000 rupees. So directly you will be making the profit of 100 rupees. So I am selling the security for 900. So I am the seller, and the buyer will think that okay, they are getting the security for 900, and on maturity they will get 1,000 rupees, so they will make the profit of 100. Now why I am selling? Because I have sold this. at 900. Now let's say I have got the interest on the first year 70 rupees. Now second year, for second year that is going on, I am selling this cash flow, that is the interest unit, I am selling for rupees, let's say 50. For third year, because the third year will be next year and the other person, that is the buyer, will have to wait for 1 year, so I am selling this third year security for rupees 35. Fourth year for rupees 25 and the fifth year for rupees 10. So let's say you can see that I have got 900 rupees by selling the face value, selling the main security, selling the interest. So first interest I got myself, so 970 rupees, and second I have sold for 50 rupees, third I have sold for 35 rupees, fourth I have sold for 25 rupees, and fifth I have sold for 10 rupees. So in total I have made how much? Can anyone tell me? 1090 rupees, around that. Okay, so no, 1190 or something. So you can see that I have made just after 1 year. Just I have kept the security for 1 year and I have got the profit of nearly 190 rupees. I have got the profit of nearly 190 rupees on the security of 1000 rupees. So now I don't have to wait for 5 years to get this interest rate and such. I can sell, I can separate the units, I can separate the cash flows, and I can sell the 5 securities, that is the coupon payments. The coupon payments I can sell, and the one security, that is the principal payment, I can also sell. So are you able to understand this stripping concept? Stripping means the process of separating the cash flows associated with a regular government security. Each outstanding coupon payment, that means the coupon payment, the interest payments, there were the 5 interest payments and 1 principal payment. So I have separated it and I have sold 4 of the coupon payments. 1 I have got, 4 of the coupon payments I have sold, 4 of the coupon payments I have sold as the security, and 1 principal payment I have also sold, and I have made the profit. Okay, according to me it is 1190. So you have made the profit of 190 in just 1 year rather than waiting for 5 years to get the profit. So this is the idea. Any confusion anyone has in this, in the stripping? So under the stripping, what happens that there are coupon strips that are created where the single cash flow of the strip represents a coupon flow. So coupon strips are the rupees 70 for the first year, rupees 70 for the second year, rupees 70, rupees 70, rupees 70. Okay, this is for the first year, second year, third year, fourth year, and fifth year. Now the person that is buying the coupon strip for the fifth year, that means the person will be getting the money after 5 years. So that's why you are selling this coupon strip for only rupees 10. So you will sell this coupon strip at rupees 10, and the person that is buying this coupon strip will think that okay, I have to wait 4 years and my money will be more than double, like it is getting triple, like 4 times. So you are like, say you are selling it at rupees 10, so the buyer is investing rupees 10 and will get rupees 70. So it is like 7 times the investment or 6 times the investment. Okay, the security, the coupon strip, the next coupon strip that you are getting, like after 3 years this is going to mature because 1 year has passed. So after 3 years this is going to mature, and let's say you are selling it at rupees 25, so the person will get rupees 70. So you can understand that this is a very good offer, or this is a very good opportunity for the retail investors, for the institutional investors that want to invest small amounts but that want to get a lot of benefit. Okay, and this is beneficial. The stripping is beneficial for the seller also, because the seller is able to get away with the government security that the seller wants to sell in parts. Okay, any confusion anyone here? Shall we proceed? So stripping, I have explained you the process of stripping, where the coupon strips and the principal strips are principal strip and coupon strips are created, and each individual security is sold at the price that the seller wants to sell, at the reasonable price. So seller also makes profit and the buyer will also make profit. Okay, so this is the idea. Now reconstitution means the reverse process of stripping. In the reconstitution, all the coupon strips and the principal strips, they are merged again. Okay, so it means the reverse of process of stripping, where the individual strips, both the coupon strips and the principal strips, are reassembled to get back the original security. So this is the idea. Now eligible securities. So all fixed coupon securities, where the interest rate or the coupon is fixed. So here in the previous example, we have seen that the coupon is fixed as 7% annual for the 5 years. Okay, so all fixed coupon strips or the all fixed coupon securities issued by state governments or union territories having a residual maturity up to 14 years. So these are the eligible securities. The fixed coupon securities that are issued by the state governments or union territories that have a residual maturity of up to 14 years, minimum outstanding of rupees 1000 crores as on the day of stripping. So there should be minimum outstanding of 1000 crore, provided that such securities are reckoned as eligible investment for the purpose of meeting statutory liquidity ratio requirements. That means that these securities, they should be eligible for the SLR, for statutory liquidity ratio. As you know, SLR is a percentage that the banks have to keep with themselves in the form of reserves. Okay, so banks have to keep a percentage of their NDTL, the net demand in time liability. So a percentage of the deposits the banks have to keep with themselves as the reserves. So in the SLR, the banks can keep cash, gold, or the government securities. Okay, so the strips or the stripping will be allowed in such state government or union territory securities that are allowed to be reckoned as eligible investment under the SLR. Okay, securities are transferable also. These kind of securities can be allowed for stripping. So these are certain criteria on which a question can come. So remember this, that all fixed coupon securities with residual maturity of up to 14 years, minimum outstanding of 1000 crores as on the day of stripping, eligible for the SLR, for the statutory liquidity ratio, and securities are transferable. So these are allowed. Okay. Next is that placing of request. Who can place this request? Okay, who can place this request? So market participants having an SGL account with the Reserve Bank of India can place the request directly in the Reserve Bank of India. So what happens that the market participants that have the SGL account is the subsidiary general ledger account. The SGL account is the subsidiary general ledger account. Let's take an example that let's say you are buying the securities or you are buying the shares. Now these shares are held under the depositories in the form of demat account. Okay, so depositories in India, we have two depository, NSDL and CDSL. So CDSL and NSDL, they are the depositories which keep your securities, which keep your shares in the demat form, that keep your shares in the dematerialized form. Okay, so the individuals or the investors, they connect with the depository participants to get connect them with the depositories. So depository participants connect the investors with the depositories, and investors shares or the debt securities or the other securities, they are kept with the depositories in the demat form. Similarly, if let's say the banks, the primary dealers, let's say they are buying the government securities, and these government securities will be kept in the demat form in the SGL account, in the subsidiary general ledger account that is maintained with the Reserve Bank of India. So if the banks or primary dealers, they are buying the government securities, that is kept in the demat account in the SGL account. So the government securities, they are not kept in the demat account with depositories. No, the government securities are kept in the demat account with the SGL account of the RBI. Okay, so member participants, that is the banks, insurance companies, or the primary dealers, they have an SGL account with the Reserve Bank of India, and they can place the request directly with the Reserve Bank of India core banking solution, the e-Kuber system of the RBI, for stripping or reconstitution. Okay, the subsidiary general ledger account with the RBI is a type of account used for holding the government securities in the dematerialized form, and through the SGL account, the transaction can happen in the government securities. These accounts are maintained by entities like banks and primary dealers and such. So commercial banks, scheduled urban cooperative banks, primary dealers, insurance companies, provident funds, they maintain the funds account with the Reserve Bank of India. Through the current account, they can pay to buy the government securities from the RBI, and these government securities are kept in the demat form in the subsidiary general ledger account. Okay, so current account is maintained with the RBI to pay for buying the government securities, and SGL account is maintained with the Reserve Bank of India to keep the government securities in the demat form. Now request for stripping or reconstitution. Now the market participants that have the SGL account with the Reserve Bank of India, they can request for stripping or reconstitution. But what about the institutions that are not the financial institutions, but they are big entities, okay, in our country, or the individuals, like the high net worth individuals and such. They also invest in government securities. So can they do the stripping or reconstitution, or can they take the permission for stripping or reconstitution? So request for stripping or reconstitution by gilt account holders. So the institutions in our country, the entities in our country, as well as the high net worth individuals, they hold the gilt account. Okay, so the gilt account is designed to hold government securities, and this gilt account is maintained by an entity or an individual with the custodian. Custodian is usually the bank or the primary dealer. Okay, so the individuals, or let's say the entities or the institutions, now there are certain entities and institutions that cannot have direct SGL accounts with the Reserve Bank of India, because only the commercial banks, scheduled urban cooperative banks, primary dealers, insurance companies, provident funds, only they can have the SGL account with the RBI. So there are certain entities, the MSMEs, there are also certain big corporations that cannot have the SGL account with the RBI. So these entities, they hold a gilt account. They hold a gilt account with a custodian bank or with a custodian primary dealer. So gilt account is the account that is designed to hold the government securities, and this is maintained by an entity or an individual with a custodian bank or with a custodian primary dealer. So request for stripping or reconstitution by the gilt account holders that are holding the gilt account in which they hold the government securities in the demat form. So this gilt account is used to hold the government securities of these individuals, institutions, entities in the demat form, and these accounts are maintained with the custodian bank, with the custodian primary dealer, with the RBI. Okay, so this is the idea. So request for stripping or reconstitution by gilt account holders shall be placed with their respective custodian, bank or custodian primary dealer, maintaining the constituent SGL, subsidiary general ledger. So constituent subsidiary general ledger account with the Reserve Bank of India, and the custodians in turn will place the request on behalf of their constituent. So basically the people, the individuals, high net worth individuals, entities and institutions that do not have the SGL account with the Reserve Bank of India, they have a gilt account to hold their government securities in the demat form. So they request the custodian bank or the custodian primary dealer that have the constituent subsidiary general ledger account with the Reserve Bank of India. So they will request their custodian, and custodian will request the Reserve Bank of India. Okay, and then the individual or the institution will get the permission to do the stripping or reconstitution. So this constituent subsidiary general ledger account, this is the account that is maintained with the Reserve Bank of India on behalf of the customers by the custodian bank. So custodian bank or custodian primary dealer, on behalf of the customers, on behalf of the individuals, entities and such, they request to hold a constituent general subsidiary ledger account. Okay, so with a view to facilitating entities having subsidiary general ledger accounts with RBI acting as custodians on behalf of their customers, on behalf of their constituents, on behalf of individuals, institutions, entities for holding government securities in the demat form. So Reserve Bank has been allowing SGL account holders to have a second account, that is the constituent subsidiary general ledger account, that in this account, that is constituent subsidiary general ledger account, this account is particularly to hold the securities or to handle the individuals or institutions and such. So beneficial ownership of securities that is held in the CSGL accounts, they vest with the constituent. Okay, so whatever securities will be held in the CGSL account, they will be the securities of the individuals or entities. Any confusion, anyone? Kindly ask me if there is any confusion, then only I will be able to move forward. So basically, the SGL account holders, they can directly request for stripping or reconstitution. They can directly request for the stripping or reconstitution. Okay, from the Reserve Bank of India, because they have the SGL account with the Reserve Bank of India. While the constituents that are the customers, we can say the individuals, the entities, the institutions, they do not have the SGL account with the Reserve Bank of India. So they have the gilt account with the custodian bank or custodian primary dealer that has the constituent subsidiary general ledger account with the Reserve Bank of India. So the individuals, they request the custodian and custodian requests the RBI to allow the stripping, okay, or to allow the reconstitution. And the CGSL account is the account that is used for holding the government securities for the constituent, for the customers. This is the basic idea. Okay. So the beneficial ownership of the securities held in such CGSL accounts vest with the constituent investors, that is gilt account holders, that are holding a account in this CGSL. Now coming to the nomenclature, that is the naming convention for the STRIPS. So International Securities Identification Number and nomenclature is given for the STRIPS. So there is the identification number that is given to the stripping or the process that is happening, and will be similar to STRIPS in central government dated securities. Okay, so International Securities Identification Number and nomenclature for STRIPS in CGS will be similar to STRIPS in the central government dated security. So basically there is the ISIN number that is given for the STRIPS. So that has a country code, that is India, so IN, issuer type or state code, so state code is YY. Okay, month and year of maturity, so month of maturity is June, year of maturity is 2835. Okay, security type is P, so this is the principal. C is for the coupon, so the principal coupons or the principal strip get the coupon code as or security type as P, and the coupon strip get the security type as C. Okay, so this is the basic idea, that this is the ISIN number. This is how the ISIN number is provided for the strip. Okay, in the case of nomenclature, the state name, like the state name, and then the SGS, that is the state government security, then the date is written, and after that what is it? It is a coupon or it is a principal, so that is written. So next is additional information. So the process of stripping or reconstitution of government securities shall be carried out at RBI, Public Debt Office, in the PDO NDS, that is in the negotiated dealing system. So the stripping and reconstitution of the government securities can happen through the negotiated dealing system under the Public Debt Office. The Reserve Bank will not charge any fees for stripping or reconstitution. The amount of securities that could be tendered for stripping or reconstitution shall be a minimum of 1 crore and multiples thereof. That means lower than 1 crore will not be allowed. So the amount of securities that could be tendered for stripping or reconstitution shall be minimum of 1 crore and multiples. All coupon strips with the same maturity date shall have the same ISIN regardless of the underlying security, doesn't matter. So if the coupon strips that have the same maturity, they will also have the same ISIN regardless of the underlying security, regardless of the security that is present, regardless of the government security, okay, from which the interest payments were stripped. And coupon strips of the same cash flow shall be fungible. That means if, let's say, 70 rupees that is going to be matured after 3 years, it is for this is the coupon for a security. So let's say this government security, state government security, this has a coupon of 7%, and the payment is 70 rupees, and this will be paid every year, let's say, and you have bought a coupon strip at rupees 20, and this will mature after 3 years. Now there is another state government security that has the coupon of, let's say, 10% for 7,000 crores of the state government security. So coupon is 10%, that means let's say 70 rupees or 70 crores and such. Okay, so this is also going to mature, or this is the coupon strip that you have bought that is going to mature after 3 years. So now this rupees 70 crores and this rupees 70 crores, they are fungible. That means they can be interchanged, because you can understand that the amount is same, the time period when it will mature is also same. Okay, so the coupon strips of the same cash flow for the same time period for the same maturity date shall be fungible or interchangeable. Okay, the ISIN of the coupon strip shall be different from the ISIN of the principal strips, because the coupon strip is different from the principal strip. The principal is usually higher amount and the coupon is usually the very lower amount. Okay, even if they have the same maturity date, they shall not be fungible. That means even if the coupon is going to mature after 3 years, even if the principal is going to mature after 3 years, they cannot be interchanged basically. So coupon can be interchanged with the other coupon if they have the same maturity and the same cash flow, but the coupon cannot be interchanged with the principal strip. This is the basic idea. Even if the amount is nearly same, then also stripping or reconstitution shall be permitted only in the eligible government securities, and the eligibility criteria has been notified to you. That what is the eligibility criteria? So that has been notified. So stripping or reconstitution can only be allowed in the eligible state government securities held in the subsidiary general ledger or constituent subsidiary general ledger accounts maintained at the public debt office of the Reserve Bank of India. Physical securities shall not be eligible for stripping or reconstitution. So this is the basic idea. Now coming to the another notification of the Reserve Bank of India. So this is a very small notification. So see what happened, that the Brickwork Ratings India Private Limited, there were certain restrictions that were imposed on it in 2024. So Brickwork Ratings India Private Limited, this is a credit rating agency. So there were certain restrictions that were imposed on this in 2024, that in respect of fresh rating mandates, it can only give the rating for the bank loans not exceeding rupees 250 crores. So there were certain restrictions on the Brickwork Rating India Private Limited. Now in 2025, it has been said that these restrictions are being taken away on this. Okay, so the banks were permitted to use the ratings of Brickwork Ratings India Private Limited for risk weighing their claims for capital adequacy purpose with some restrictions. That means the credit rating agency, that is the Brickworks, on this there were certain restrictions that were imposed, that the banks can only take the credit rating from Brickworks to a limit. There were certain restrictions for the bank loans not exceeding rupees 250 crore. But now it has been said that on a review, it has been decided to remove the restrictions or limits placed on the use of ratings of the Brickworks Rating India Private Limited. So now the banks can use the rating of the credit rating agency, that is the Brickworks, without any restriction. Okay. Any confusion anyone has? So this is it. Now if you, I hope this concept is clear. I hope the stripping is clear. In the stripping, just the principal and the coupons are divided. So if the principal is 1000 crores, let's say, and the coupons are 70 crores, 70 crores, 70 crores for different years, for 5 years. Okay, this is the coupon, and that you will be getting in 5 years. So on first year, on second year, on third year, on fourth year and fifth year. The longer, let's say you are selling all these coupons separately. So if you have to wait for the fifth year, or if the buyer has to, if the buyer that is buying the coupon has to wait for so long, so the security can be sold at cheap, and then the buyer will want to purchase it. If let's say the interest, you are selling this security separately, or you are selling this coupon separately, and this is going to mature in the second year, so that is quite soon it is going to mature, so you can sell it for, let's say, rupees 50. If it is going to mature on third year, let's say you are selling it for rupees 40. If it is going to mature on fourth year, let's say you are selling it for rupees 20. Okay, so whatever makes profit for you, you can sell the coupon separately, you can sell the principal separately. Okay, and now this has become a zero coupon bond because the coupons have been sold. So this has become a zero coupon bond. Now zero coupon bond. Okay, now you are selling it, let's say, rupees 900, and after 5 years, when the person will get the matured amount, the person will get 1000 rupees. So let's say you are selling the principal coupon that is having the face value of rupees 1000 crores at rupees 900 crores, let's say, or at rupees 900. So the person, after 5 years, when the person will get the maturity amount, the person will get 1000 crore. So this is like a zero coupon bond that is sold at less than face value. Okay, so this is the idea. So I hope this is very much clear, and do rewatch it so that you have the clarity. And this is the Perspective 360 on Monday, Wednesday and Friday. On Monday, Wednesday and Friday, you will get the Perspective 360 degree session at 5 p.m. for your answer writing practice. Okay, so that you can do the answer writing practice, and you can also get the recent topics that are in news and from which the descriptive questions can come in the examination. So this is the first question. I hope you will be easily able to answer this question. So do try to answer this question. Okay, so this is the first one, and this is the second question. Again, do try to answer this question. I hope you will be able to answer this question. Okay. So thank you everyone. Thank you for joining. See you in the next session. Thank you everyone.